Ready? Hello, I'm Greg Harrison with USDA Market News Service here in St. Joe, Missouri with your national feeder cattle summary this week. Well, to start the week, feeder cattle market attempted a pretty good rally on Monday despite lower futures on Monday. A lot of the markets on Monday, Oak City, Joplin, Sioux Falls, a lot of other markets throughout the trade area, calling their cattle mostly higher. Under 800 pounds trading anywhere from $5 to $15 higher, and yearlings over 800 pounds trading steady to $3 higher. And then from midweek on, the rally started heading south as futures continued sharply lower. Markets traded very uneven. Yearlings over 800 pounds in most cases $3 to $8 lower, and calves traded very uneven, anywhere from steady to $10 lower. Old Man Winter returned this week with sub-zero temperatures and snow across the Midwest and northern plains, freezing temperatures throughout the southern plains. This limited receipts in many of the areas and also in the auctions that I previously mentioned. But on Monday, the bears came out pretty much, erased all of last week's gains in the futures and continued to prowl in the cattle complex through most of the week. Futures to start the week seemed to be playing off USDA's cattle inventory report, creating another round of anxiety in the futures trading. Inventory report reflected larger herd rebuilding than was anticipated, as most analysts were looking at to be unchanged at slightly lower numbers. The total inventory was 1% above year-ago levels, for putting all cattle and calves at 89.8 million head. This is still the smallest herd since 1952. Beef cow expansion came in at 2.1% higher, and this was also a little bit larger than expected. The 2014 calf crop came in at 33.9 million head. That was up 1%, a little bit larger than last year, but numbers still remain tight. The inventory report represents really long-term in nature and has little really to affect on the immediate supplies that we're seeing for 2015. It's just that with all the bearishness that's in the market, it nonetheless doesn't help the outlook or cattle future psychology as it just fits in with all the negativity that's going on in the market. This is a market that needs to find some confidence in the fundamentals that matter enough, in the cattle futures just seem to be at this time on one set mind, and that's just lower. There is a lot of negativity out there in the markets, whether we talked some about it last week, whether it's world problems, currency problems, dollar at 11-year high, oil prices, West Coast port slowdown, strong demand from competing meats of pork and chicken. Nonetheless, it just keeps playing into this negativity and the mindset of all the commodity markets. It's just like volatility begets volatility. But if there was some good news this week, the markets, at the first of the week started out higher, a lot of good gains on a lot of the, especially in the calves, and some modest gains in the yearling market. And so we know the market can go higher. Hopefully, when it gets some good news, it can really build upon it. It's just getting that good news. But we did see some higher markets to start the week, and like I said, the futures just kind of played into it as the week went on, and a lot of the markets just started getting lower as the futures had some major losses. But we did start out the week on a pretty good note at a lot of our major markets. Like I say, we had some limited receipts at them, but the markets can show that they can go up. So hopefully next week we'll see what happens. Thanks for listening. Be back with you next week and catch more markets at this website. Thank you.